in. Right? I mean, it's easy enough to understand retracements. It's easy enough to understand what each bar is telling us, but understanding what the direction of the trend is, as well as how to monitor various pivot levels and how to use them for trend change, it really, as I said, starts to bring it all in. All right, so one of the first things we need to understand is that trends are operating in every time frame that we could possibly look at, but we can't trade them all. And so we have to determine which is going to be the time frame that we're going to trade from, and then only focus on the trend in that time frame. Trade reversals in the direction of the trend and in the time frame focused on within a void of a larger time frame, and its trend is going to be key. What does that mean? Well, basically what that's saying is that we're only going to trade in the direction of the trend based on the time frame that we're using, with confirmation of a void based on a larger time frame. So for example, 5 minutes in an uptrend, we have a pullback in a PBS. The 15-minute has void to move higher. That's all we need to know. We're going to take that PBS and we're going to manage it based on prior bars lows. That's going to be what we do. Unless we decide, okay, you know what? I think that this can keep going. I think it can trend. So I'm going to use pivot lows to trail some of this. But how do we know which pivots to use? We're going to get there. Trends often end once a price void has been filled, or that trend becomes climactic. Filling a void and a climactic pattern is a powerful combination that ends a trend. Now, when I say ends a trend, do I necessarily mean that the market or whatever we're trading is going to collapse back down? No. But short term, it puts a stop to the overall excitement. Odds are we're going to see a retracement. Without a trend, the odds of being whipsawed are much, much greater. In other words, if the trend is sideways, don't try and trade it. No one's in control of the market at that time. John, I do think that that's okay. But if things start to become climactic, I would go to the prior bar, just one bar back. Because if things become climactic, you're getting closer to the end of a move. So at that point, I wouldn't use 2 bars back. I would go to either 1 bar back or even the bar, the current bar as it's forming, if you wanted to be really tight with it. But I think it's okay, especially initially. Initially, I think using 2 bars back is really where you want to be. It gives it just enough room to breathe. And so the ability to recognize a trend and its turning points will increase the odds of successful trades. So here are various examples of uptrends and downtrends, and some of the things that will begin to happen that will give us heads up that we're no longer in an uptrend. Yeah, you have to. Patience is key, with trading. I think patience is one of the hardest things to develop as a trader, especially if it's not in your nature. So here we have a clear uptrend. No problems here. Higher highs, higher lows, consolidations that break out. Everything's looking good. In example 2, we have nice uptrend, but then we get a new high reversal. a new high that reverses back down in a deep retracement. This is starting to put that prior strength in question. Right? The M top is even more questionable because we had a retest and a break of support here. So at this point, we're no longer in an uptrend. Right? Examples 1 and 2, we're still in an uptrend, but with the second example, things are becoming more questionable. Examples 3 through 5 are most questionable. No longer are we in an uptrend, and in fact, we can potentially short the right setups. So an M top, we can short a lower high if it was to form. Right? A lower high shakeout. Right? What we have here is a strong move up, move back down to major support, lower high, and here this is starting to come back down. Now, this may hold major support once again, or it breaks through it. We have to wait and see. But this is definitely telling us that uncertainty has increased. Right? And of course, the most questionable is the break of major support. A complete retracement that breaks major support. That is most bearish, and we're looking to short a retracement. Right? This is just the opposite. You can all see that here. The most bullish being the break above major resistance. Number 2 and 4 haven't broken major support, so why are they beginnings of downtrends? Well, they're not beginnings of downtrends. They're just no longer in an uptrend. Because I agree with you. They haven't broken major support, and even number 3 has not broken major support. But, so it's not fair yet to say it's in a downtrend, but it's no longer in an uptrend. So that's again why we have to wait and see what develops going forward. We can't say that it's the beginning of a downtrend until after the fact. We can then look back and say, yeah, that's what started the downtrend. But at this point, with examples 2 through 4, we'll just say that the trend has now become neutral. We need more information before we can really determine or say with any confidence whether the uptrend is going to continue or if this is going to start a new downtrend. Exactly. Well, they are in an uptrend until major support's broken, but double tops, new high failures, shakeout patterns like this, it begins to increase overhead supply. It tells us that the bears are becoming more aggressive. Right, you do want to see it close, not just a break. I mean, if it's just a break by 1 or 2 ticks and then it pops back up, that's not significant. You want to see that it can close below it. But I mean, if it breaks below it and then you get a bottoming tail, that's kind of just getting crazy. But Cantormel, let me ask you this: would you buy a PBS from an M top? Let's say that this pulled back. Would you be looking to buy a PBS knowing that it came from an M top? All right, I just want to make sure you get sometimes if the trend is really strong, if the internals are really strong, maybe this could just start to base here. But the fact that we have a double top, it just simply tells us that supply is increasing. We are still in an uptrend, but it is becoming more questionable. So here we have strong uptrend, strong downtrend. We're buying pullbacks and breakouts, expecting that we're going to see continued follow-through. Right? We're shorting retracements and breakdowns in a downtrend, expecting follow-through. all retracements stall and reverse at or above or slash below, depending on which one we're talking about, major support or major resistance. Now, shock bars also increase the odds of breakouts and breakdowns. So, in a downtrend, what would help to increase the odds of a breakdown following through? A failed attempt to move higher, right? So a breakout in a downtrend will help to increase the odds of a breakdown, and not only help to increase the odds of it, but also increase the reliability and the follow-through to it. Because that shock, that failed breakout, catches traders on the wrong side. And in reality, who's even, what are you doing? What are you thinking buying a breakout in a downtrend? Why is that even a thought in your head? Right? Breakouts in a downtrend should fail. Breakdowns in an uptrend should fail. So looking for those helps to increase the odds of one of the two happening, breakout or breakdown. Now, this, again, we're breaking down each of what we were just looking at. This is marginal sign of weakness in an uptrend. We want to consider profit taking, but not necessarily shorting, because again, we still have not yet violated major support or major resistance. And so this, like it says here, is just a marginal sign of weakness. We're not yet looking to go against the prior trend. Example 3, though, with this M top or W bottom, this is a stronger sign with an M top here. There's a stronger sign that weakness in an uptrend. We definitely want to consider profit taking and potentially looking to short. Right, we would have to look at some other factors as well, such as, is there resistance to the left? Has this become climactic? Is there a potent reversal? Everything that we were talking about so far today. Now here we have the lower high or shakeout pattern. We're not in an uptrend, so we can potentially short. This is a stronger sign of weakness because we pulled back to major support and tried to move higher, failing to make a higher high. That's why this is a stronger sign of weakness. So we could consider shorting that weakness or buying the strength if it was a higher low. Right? Again, the most compelling here is the actual break of major support or major resistance. This is the strongest sign of weakness in an uptrend or strength in a downtrend, and we can either consider buying the pullback if it's breaking above major resistance, or shorting the retracement on a PSS if breaking major support. Okay? Now, with that example, number 2, right? Just want to make sure I'm talking about the right one. Not number 2. Similar to the shakeout type of scenario, but the difference here, right? It looks similar to the shakeout, that number 4 scenario that we looked at. It looks similar, but the difference is the retracement's not nearly as deep as in number 4. And so put that somewhere on this slide. Write it somewhere on here that the difference between this and example number 4 that we were just looking at is that the retracement with this particular setup is not nearly as deep. It doesn't come as nearly, it doesn't get as close to major support as the other one. So that's the difference here. That's the nuance. What we're looking at here is what's known as a bull flag. Right? We get the first retracement, which pulls back to, maybe there's just a little minor support there. Maybe there's nothing at all. But that first retracement fails to make a new high. We then pull back, making a lower low, but this time it's right down into the area of major support. Right? This sets up the bull flag, right? Or a PBS on a higher time frame. Now at this point you should see that this does not break major support. We're not going to consider this higher low major support because it didn't make a higher high. So this didn't break major support. Major support remains down here until a higher high is made. Right? So we could be looking to buy this lower low, right, based on whatever it is we're looking for, a bullish changing of the guard, a potent reversal, a breakdown failure, whatever the case is, and we'd be looking for a move up to a higher high. Right? And then major support becomes this area here. Same for a downtrend, a bear flag. First retracement up is shallow and it fails. We get a higher high right into major resistance, and then that's where prices start to roll over from and we get a move down. You guys see the difference here? And do you understand the concept? More importantly, the idea of a bull and a bear flag. All right, well, where are you unsure? Where does the confusion come in? Where do you find yourself asking the question? Difference between side 4. All right. So the retracement here is shallow, about what, 40%. Right? Can we agree to that? That this retracement's about 40%? We can use 50 if you'd rather. Yeah, no, from the high to this, where this tries to stabilize. That's the difference I'm talking about. So this retracement here, right, is only about, we'll say 40%. Right, exactly. It's much shallower from the top. That's the difference that I want you to focus on. Why is this more bullish than 4? Well, because this one, on the first pullback here, this one doesn't penetrate as deeply into major support. Right? Look at number 4 here. Look at how deep this retracement is on the first pullback. That's why it's more bullish. The angle of retracement here is much more controlled. Right? You see the angle, if we were to just do it like this, the angle of retracement here is more controlled than it is on the other one. I'm just going to copy this line and apply it to this, and you'll see that the angle is not nearly as, controlled. It's much steeper. It's like straight down. How do you distinguish between a higher low and major support? Well, what has to happen for it to become major support is a higher high. So let me just move. Let me get rid of this for a minute. Let's say that this did something like that instead. All right, let's say this higher low then pushed up and made a higher high. This would then become major support. But because it did not, and it just did this little guy, this little deal, it's just a higher low in relation to this pivot. You see that? So, again, if this made a higher high, this would have been a higher low and major support. But because it did not make a higher high, it's just a higher low. It's not major support. All right, so here we have a chart, and it's numbered, right? 1 through 5. Each of these numbers represent either confirmation, continuation of a trend, or some type of reversal. So all you're looking for is a lower low. Well, yeah, I'll go back to this slide. This lower low, in this example, does not take out major support. This lower low does not take out major support. All you have to know is that major support is the pivot low prior to a higher high. Right? If we just started to bounce around going sideways here, this would still be major support. It's not until major support is taken out that we have a trend reversal. Exactly. Without breaking major support, the uptrend is still intact. Absolutely. It'll all come together. You'll start to see it. Anytime you start to learn a new concept, it's always going to take some time to get used to it initially. But once you start to really see it and understand it, you're going to get to the point where you say, why was that so difficult for me to understand? I mean, I was there. Don't get me wrong. I 100% was there. I can look back now and say, why was I having such a hard time with that? And it's because, you know, it's because of everything else out there that's being said. Yeah, ideally it's going to be on the close, Chris. And so let's look at some examples. I think some examples may help it get cemented in. So, trending or continuation of uptrends create areas of support by testing a prior bar's low and then continuing to move above that prior bar's high. You can see that here. And we then, at 2, right, 2 represents a new high or low reversal. We only have one of those down here. Broke to a new low and reversed back up. M or W's, we don't have any of those here. Shakeout, here's your shakeout. Sideways, relatively speaking, move up, back down, and here's little topping tail signaling lower. We get breakouts, breakdowns right here. So this move up created a void. Right? Over time, we moved away from it, which made it that much more significant of a void. Once we broke down, there was nothing to stop this until we came to the bottom of this prior support area. This move up, though, left nothing, no reference points for buyers to bid at. And so you can see how this is all coming together. Same idea here, marking up these charts with numbers 1 through 5. Over here, we have a new high, right here, new high reversal, came right back in. And it also turns into a shakeout. Potent topping tail, strongly suggesting or indicating that we're going lower. And then we get a breakdown. Prices then continue to trend lower until this area here where we get a new low reversal. Then we get a retracement back up. Here we are now into major resistance. There's a bit of a reaction, but no follow through to this down bar. We get continuation of the prior strength. Prices move higher. We're no longer in a downtrend. Then we get this new high reversal, which turns then into a shakeout. Breakdown under major support puts the trend now down. Here we have an M top. After breakdown under major support, we short the next retracement. Here's an M top. Double topping tails after a breakdown with a void above creates resistance. Right, this move down created a void above. But these two topping tails, this double top, establishes a new area of resistance. Okay? So with this double top, it's okay to short, and then we get continuation of the weakness. Again, same thing. Trend is down. Notice this bar right here. We could even put a number 2 right here, a new high reversal. That's a compelling bar right there. Then we get a PSS into the gap fill, trending, continuing to trend lower. Another PSS, retracement into resistance, inside bar. Break the low of the inside bar. Continue to move lower, lower, lower. Oh, a new low reversal, beginning to establish support down here. Right? Starts to retrace up, comes back down. Now we have a W bottom after this potent reversal. We then get a breakout. Prices start to move up. Okay? Now we come to major resistance. And this is major resistance. This is not major resistance, that little guy right there. Because this is only a level 1 pivot. When we define the pivot levels, what we're going to use as a rule is this. It has to be a level 2 pivot or better to be used as major support or major resistance. And so this is our major resistance up here. We move up to major resistance, going sideways here. Here's our little money bar. This says that this is going higher. Like this little breakdown failure and money bar, this is what ignited such a strong move. Right? Then you had this continuation here, and you also had this little stall and breakout there. This, John, is kind of like what we were talking about earlier. This isn't a breakout failure, but what it does say is momentum to the upside is now slowing, and we're likely going to see a retracement back down. So based on that move up, based on this move up, major supports all the way down here. Right? Major supports all the way down there. But minor support is over here. And so we could retrace down to here, touch minor support, stabilize, and then start to move higher again. Okay? So what typically precedes the end of a move? What are some characteristics? Well, a climactic move, for one, which leaves no reference points of support or resistance back up the opposite way. This generally occurs after a trending type of move. A large bar that forms after several smaller range bars that are moving in the same direction. That would be our wide range bar example, things getting climactic. That typically precedes the end of a move. A shallow retracement against the trend followed by a retest of that prior high or low and reversal. This is our M or W pattern. A breakout or breakdown followed by a potent reversal candle, 180, or range expansion, bottoming tail, topping tail. And any combination of the above, ideally at support or resistance, also precedes the end of a move. So here we have prices moving lower for several bars in a row, then things becoming a bit more climactic with the wide range bar down. That tells us, it doesn't mean that we're going to reverse on a dime. Sometimes we will get continued weakness a little bit, but the majority of the move is over, and you can see that here. Then we begin to move higher. We start to move up, come into prior resistance. Then we get a bit of a pullback. There's really not much support here, but prices are still trying to stabilize. We then get a retest. Lower low pattern into the next support level, setting up that bull flag. So this is what we were talking about earlier. This retracement really isn't very significant. Then it tries to move higher, comes back to the next area of support. That's where we get the reversal and we begin to move higher. This move down never once put into question the prior move up. And also, you might look at these bearish bars and say, well, you know what, Kurt? These are some pretty bearish bars. And I would say, yeah, I agree, but did they have any follow-through? That's what being objective is all about. I would have taken it over this bar here, this green bar. you get the pullback, some stabilization here, green bar closed up near its high, that's where I'd be looking to take it. Then we just continue to trend higher, and then things get climactic up here. Wide range bars, as emotions are increasing, and greed is becoming a much greater emotion, a driving force here, and then things start to retrace back down. So you guys take a minute to label these question marks. Label them 1 through 5. Let me, and then we'll go through them and we'll take a look. On that prior slide, no, I wouldn't, because the trend is still up and we're right into support. So I would not have. Not just looking at that chart. All right, so what do we have here? What is this one? What's the first one? This guy's got to work for it this time. Yep, 2, new high reversal. That's right. What is the next one? Right here. Where my arrow's pointing to. Yeah, it's 4, a shakeout. Shakeout. Right. I think, Chris, you may have been this one. What is this one here? Yep, 5. It's a breakdown. Now, this green bar back up was a potent reversal, but it was followed by a 180 bearish wide range bar back down. So yeah, we don't want to see this kind of a bar after a breakdown, but once we can get a bar reversing like this one did, it lets us breathe a little easier. And then this one here, what is this one? One, exactly. Trending continuation. Exactly. Very good. Question. And I have an answer. At 5, are you stopped out? Well, that would depend on how tight a stop you keep. If I'm going to short this breakdown, personally, I probably would have been stopped out. On this breakdown, I wouldn't have given it all the way back to the top of this bar here. Not with the way that closed. But after that next bar was reversed, I would have had to re-enter. But if you left your stop up here, you would have been perfectly fine. I mean, you would have been sweating it, but you would have been okay. Let me ask you this, though. Why do you think that we got this kind of reversal? Well, you would re-enter on the very next, the wide range 180 back down. You would just enter when it broke that bar's low. But why do you think that this reaction happened? Based on what? Yeah, exactly. Support to the left. Exactly. That unfilled gap. It filled the gap. Exactly. Hit that support, and we got the reversal back up. Exactly. You guys got it. We don't need any moving averages or magic lines on the chart to tell us that. Exactly. Not one. Just going to wait before I go to the next slide here for this question. Well, if you feel better with training wheels, that's okay. At 5, the trigger would be under the pivot. So right here, this is 5. So under this bar, is that what you're saying? The trigger would be under that bar? Oh, right here. Yeah, that's where I'd be entering as well. If this was the time frame that I chose to trade from, that's where I would be entering as well. All right, so talk now about pivots and monitoring them for trend change. Oops, where'd I go? Hold on. All right, so as I said before, all price pivot lows begin with higher lows adjacent to both sides of the pivot bar. All pivot highs begin with lower highs adjacent to both sides of the pivot bar. When we have higher low bars adjacent to both sides, it tells us demand has increased. If this price pivot low is broken, the demand that created this reference point has failed. It tells us that supply is increasing. So once higher lows or lower highs have formed, there's no doubt that supply or demand has increased. It does not mean, though, that the trend has changed or that we need to take action yet. What we're going to do is objectively read what's going on between the supply and demand at any one given moment in time. And this is how all turning points within a trend happen. Right? So this script, these P's are representing different price pivots. Here we have a strong move up, and then we get a very minor pullback. Okay, minor pullback, pushes higher, then prices retrace back down. We get a bullish changing of the guard that fails at major support. And because this was our reference point. So once we got this breakdown, there was nothing to stop prices from falling. So based on this shakeout, whoops, hold on one second. Based on this shakeout and breakdown under major support, there was valid reason to think of shorting. It's just a question of whether or not we would get our pattern to give us an entry into this. Now, after this accelerated move down, which created a void back up, prices tried to move higher. But what happened here? What happened here? We discussed this a little while ago. We get a retest. What does this do? You know, it's a double top. Exactly. Yeah, exactly. It creates a new area of resistance. Exactly. Because these bullish bars, they told us that this was trying to stabilize and move higher. But it was never able to overcome this double top. And so it then dropped lower yet again. Then we got this bottoming tail range expansion bar, and things started to stabilize a bit more significantly at that point. So because the trend was down, we're not even thinking about going long. This does tell us that stabilization is taking place, but again, the double top here creates resistance, and then we want to be looking to short. Again, here we have move up, pivot lows forming in this uptrend, establishing new reference points of major support. So while pivot highs were forming, which told us that supply was increasing, because the trend was up at this time, the odds of overcoming it were greater than the odds of not. In an uptrend, prior pivot highs are going to be overcome. It's just the way it has to happen for the trend to continue. So when you look at a PBS and you say, well, you know, I'm going to take the PBS, but then you get out at the prior high for fear of it turning into a double top, well, don't do that. Because for the trend to continue higher, we are going to, by definition, take out that pivot high. Then we start to consolidate a bit more here. Several attempts to move higher result in topping tails, and then we get this bar that closes on its low, which is then followed by a breakdown. Breakdown and close below the base here, which tells us that supply is increasing. Yeah, you might want to take some off, sure, but I wouldn't exit the entire position. All right. So, you know, again, we get a breakdown here. Would that base have been major support? Well, we really didn't have a significant new high. It did make a slight higher high. It wasn't all that significant, but, you know, I would have said to myself, if we break this, where do I think we're going? My thinking would have had is coming back down to here before anything significant happening. So I would have considered this major support. You know, if we broke down and closed below it decisively as this did, my next reference point's not down until here. And then, once it couldn't even stabilize, we're thinking that, you know, where's the next reference point? Well, it's all the way down here. But how far away is it? Right? This was at 10 o'clock, and here it is now almost 2 o'clock. Is that prior low really going to have that much of an impact? And this is what I was talking about earlier. As we move away from prior support or resistance areas through time, though the impact, their relevance, does diminish. And that's why we were so easily able to push through that reference point. And we get several attempts to move higher, no follow through, breakdown, and then it tries to retrace back up. Now, it says it here, but can you all see why this retracement never took out major support? A few yeses. All right. If you don't, again, it's important that you speak up. But we never broke major support because here's our pivot low. Right, this is our pivot low prior to a higher high. So this is major support. This retracement, while it is deep, never violated this support here. It never broke this pivot low. It did break minor support, right? Minor support being right in here. Whoops. This is our area of minor support, but the trend is defined by major support, which we never did break. Did you see that, Chris? Major support being the pivot low prior to a higher high. All right, the question was, do you understand why, or can you see that major support was never broken? Okay, cool. Very good. All right, so let's define these pivots. All right, we've got levels 1 through 4. Like I said, level 1 pivots we are not going to use to define major support or major resistance. These level 1 pivots are going to be seen in strong trending markets. Right? At times, these will become the little correction bars that we talk about. So a level 1 minor pivot low has 2 or more adjacent higher high, higher low bars to the left or right, and only 1 to the other side. So you see here, we've got 2 higher high, higher low bars on the right, and only 1 on the left. So this is like our little continuation pattern here. Little pullback, little bottoming tail, and then we go again. This is not major support. Here we have, so this is in an uptrend. Yeah, it's like a money bar. This is in an uptrend. Now a pivot low, a level 1 minor pivot low in a downtrend it's got 2 higher low, higher high bars on the left. Now it's got 1 higher high, higher low bar on the right. Right? Now, level 1 minor pivot highs. 2 or more adjacent lower high, lower low bars to the left or right, and only 1 to the other side. So let me just show you how these are kind of related, these pivots here. Do you see that here we have a level 1 minor pivot high? You can see that here, right? But what is this right here? Is this not the same as what we have right here? It's a minor pivot low, a level 1 minor pivot low. It's got 2 higher high, higher low bars to the left and 1 to the right. So So can you see how if in a downtrend, right, this is a level 1 pivot low, but we can begin to then get, this can become a level 1 pivot high. Right? The only thing that has to happen here now is a lower high, lower low bar. Consecutive, well, not consecutive, but like this. And do you see now how we have the same picture? And the same can be done for this example. So everybody clear with this one? I hope I didn't confuse you with doing that. All right, good. Not yet. All right, so again, level 1 pivot highs and lows. These are going to be seen in strong trends, right? And we're not going to use these to define major support or major resistance. Levels 2 through 4, however, we will use to define major support and major resistance. Okay, so level 2 minor pivot low has 2 higher low bars adjacent to each side of the pivot. It does not have to be higher low, higher high bars. It just has to be 2 higher low bars to each side. Okay? You can see that here. This is our pivot low. Here is our level 2 minor pivot high. 2 lower high bars adjacent to each side. Level 3 major pivot low. 3 or more higher low bars adjacent to each side. Again, does not have to be higher high, higher low. It is, you know, and that's what kind of makes it difficult to understand at first. But once you start, I mean, once you train your eye to see it, like anything else, it's just going to start to click. It's going to become second nature. It's just getting used to it at first. And so again, what happens when you have 2 matching highs or lows? You mean like, hold on. Something like this, if it's side by side, then, you know, it's not by definition a pivot, but if we, I mean, part of it is using common sense too. So if it's side by side like this, and we're starting to see supply increasing in this way, and prices moving lower, then while it doesn't exactly meet the definition, I'm not going to be so strict and say, well, absolutely not, this cannot be major resistance. I mean, no, if we, let's say we're in a downtrend, here's a PSS, we start to move lower and make a lower low, I'm going to use that as major resistance. So it doesn't have to be, you know, exact, but this is the general guidelines that we want to use. But if we do run into a situation like that, I don't mind saying, you know what, for 1 or 2 ticks, I'm not going to be a nitpicker. So a level 3 major pivot low has 3 or more higher low bars to each side. Remember, it doesn't have to be consecutive higher low bars. It's just got to be higher low bars in relation to the pivot bar. And it doesn't have to be higher high, higher low bars. A level 3 major pivot high has 3 or more lower high bars to each side. And again, it's in relation to the pivot bar. It doesn't have to be lower high, lower high, lower high. It could be, lower high, higher low, lower high. As long as they're all lower highs in relation to the pivot bar itself. And our level 4 major pivot highs and lows will be defined by 2 or more consecutive higher high, higher low bars to the left and to the right. Level 4 major pivot high, 2 or more consecutive lower high, lower low bars to the left and the right. So in this example, it's got to be consecutive. Let me ask you guys something here. What would happen if I did this? If I move this down right here, what happens? What pivot level are we now dealing with? A level 2. Exactly, because we've only got 2 bars. For it to be a level 3, it's got to be 3 bars to the left and to the right. It's got to be 3 higher low bars. No problem. Hey, that's why I asked the questions. Right, or lowercase m, uppercase p. That's how it would be denoted on the chart. These level 4 pivots are going to occur after a prior fluid price move, not a congestion area. We're going to see level 3 pivots in congestion areas. At times, maybe even level 2 pivots will form in congestion areas. And we're going to look for a change in direction in what we define as a quality trend. The type of pivots seen often suggests the level of certainty. A level 4 pivot is much more certain than a level 2 or a level 3 pivot. Okay? So, here we have, we looked at this earlier today. Here we have a level 4 pivot high. 2 consecutive lower high, lower low bars to both the left and the right. We then move lower. This becomes a level 3 pivot low. We've got 3 or more higher low bars to both the left and the right of the pivot bar itself. Then we get a level 2 pivot high because it's got 2 lower high bars to the left and the right. Then a level 2 pivot low. Here we have our level 1 pivots. We've got 2 lower high bars to the left and 1 to the right. Then our level 1 pivot low. We've got 1 higher low to the left, 2 higher low bars to the right. Simple enough? Everyone on the same page? Yep, good. Oh, great. And the reason the second support is level 2 is because it's in an area of congestion. The reason the second support, oh, you mean down here, second support. Well, yeah, that is essentially why it does become a level 2, is because it's got some more overlap. If I had dropped this bar down and we had 2 higher high, higher low bars to the left and the right, then this would have become a level 4. But because it is in this congestion area, that is why it's a level 2, yes. Well, it's different degrees of commitment or certainty. Level 4 pivot high or pivot low is going to be seen in a much more certain trend. When you start to get to level 3 and level 2 pivots, you're starting to deal with some more overlap like you see here. So ideally, we're going to be dealing with level 4 pivot highs and lows within a trend. That's going to be the cleanest price action that we can see. Well, level 4 and level 1. And when we start to see level 2 and 3s forming, it's starting to become a little more uncertain. Yeah, for it to be a level 4, it's got to have higher low and higher high bars. For it to be a level 2, all it needs is higher low bars to each side. Do you like to take minor pivot plays, and what are your general rules, trigger and stops? Like, do you wait to clear? Well, if we have like a 1, 2, 3, 4, so like, for example, if I was to move this up a little bit and move this guy down a little bit, and let me extend out this tail if I can get this. Well, you see how we had this move up and then a little consolidation here with the bottoming tail that took out the prior low? I would absolutely take this. I would take it above the red bar, expecting that this can continue. But I don't like as much a 1, 2, 3 continuation. I just find that with E-minis, they have a greater odds for failure. The only time I'll take a continuation higher is if it's a really strong day. Well, that's what the seminars are for. You know, that's really why. You know, I think because, and another thing is that, you know, we could do the DVD, but so many questions would come up. You know, you as a viewer would have so many questions that wouldn't be able to get answered unless you took the seminar or had some kind of coaching. So understanding price pivots and support and resistance are really, really two key concepts, but I think that in a DVD there would just be too many questions. You wouldn't feel satisfied at the end of it. You would say to yourself, like, I know that I have such a valuable DVD in my hand, but I just don't know what to do with it. I don't know how to take all this information without getting my questions answered. And so that's why we really reserve this kind of section to a seminar, because we're able to answer the questions that you have. This way you do leave feeling fulfilled, and that you do know how to understand and use the information in the market the following day. So this is the script from eSignal, also available for TradeStation, and it's going to mark the various pivot levels 1 through 4, as you see here. And it's going to mark them as they form. So maybe at one point you'll see it marked as a level 1 pivot, and then it becomes a 2. It'll mark it as a 2 once that 2 forms. And so we're going to use this script to our advantage to quickly identify these. Now that's what's nice about having the scripts. We don't have to sit there and say, well, all right, here it looks like a pivot. Now let me count the bars to the left and to the right. All right, so it's nice to have this script to be able to do that for us. And then we just monitor the trend. From this area here, was major support ever taken out? If yes, when did it happen? All right, if we start from right down here with this triple bottom, when, if at all, was major support taken out? And remember, major support is not, it's defined by level 2 or better.
Of course it was.
2 no's. Any yeses? You have, on page 10, I have page 11. The tail on level 1 is much shorter. You talking about right here? Let me just go back real quick and get this question answered. Yeah, I just manually adjusted this. So ignore this. It looks exactly as in your book. I was just saying that if I had this pattern, I would be very aggressive in taking a long entry over this bar's high. But I was playing with this. I manually adjusted the bar. Alright, so getting back to this. We did take out major resistance. Where? Right after the double top. Right, this double top moved lower, and we took out major resistance right there. Right, this, well, doesn't look like we made, well, I can't, it looks like maybe we just barely made a new high. Right, so it's kind of a trick question, I guess. This double top says that we're no longer in an uptrend, and so we can short this right here. We can short this move, this retracement here, because we're no longer in an uptrend. And we did take out this pivot low. So I think it would be fair to say that you're both right. Those of you that said yes, I would agree with. Those of you that said no, I would also agree with, but recognize that the double top tells us that we're no longer in an uptrend. Well, every trade decision hinges on pivot analysis. As long as we're in an uptrend, we know to be buying pullbacks to support or breakouts. Pivot analysis is really what trend analysis is based on. And we have to understand pivots to understand when the break of major support or major resistance takes place. So it's not so much that a pivot analysis leads us to a trading decision, but more that understanding the trend we're in based on pivots will allow us to decide whether we want to be taking a long bias or a short bias. That's correct, Cantermel. Major support is at a minimum a level 2. It can be a level 2, 3, or 4. And let me read this again then. Aside from requiring that major support. All right, well, how about this? If major support is taken out, if we trade below, in an uptrend, if we trade below a level 2 pivot or greater, we can then short the next lower high. And PSS. Does that help? All right, so is there another example? Any pullbacks to major support? If you get a pullback to major support and you get a W bottom, that you can take that long. Basically, using the pivots is exactly what Mattos just said, to assist you to form your current bias. So, as long as the trend is up based on our analysis of pivot levels or pivots, as long as the trend is up, we're buying every pullback to major support or minor support. If we break major support, then we short the next lower high. So, I think that's as simple as you really want to look at that. As long as the trend is up, we're, based on our definition, you're buying the pullbacks. Once one pullback breaks, you start thinking opposite. No, not really. I mean, that's the only way I use these pivots. You can use them for management. You can use them if let's say you want to maybe day trade something. If you think that that you're going to have a trending day, right? Then you use pivots for management on your position. You can use them in that way as well. And if you're going to hold a position the entire day looking for it to trend, as long as it's respecting those pivots, then you're still in the trade. So let's say, for example, we did buy it down here. Right? Then once we got this new pivot, our stop gets moved up to there. Right? Then we get another pivot forming, and then we move our stop to here. Right? We just continue to move our stop up until we break support. Well, it may seem simple, but so many traders get caught on the wrong side of the trend. No, and it's not necessarily something big. It's just it is something relatively small, but so many traders find themselves on the wrong side of the trend that they don't know how to properly analyze the trend. So if you understand this and this is clear to you, then you have a step above many, many others. All right. Let me just go back here. Yeah, I'm going there now. Is there a second break of major support on the far right, or is the reference point the third MP from the left too far away? So you're talking the break of this here, this MP right here. Well, once we have the double top, it tells us that we're no longer in a downtrend. Once we get the lower high and break to the downside here, right, this just becomes a reference point where prices may stall. We're not looking at this anymore as major support, because major support was transferred up to here and then up to here. So this just simply becomes a pivot low where prices may stall within this downtrend, this newly established downtrend. All right, good. Now with the script, with the pivot script, we can change the background of the chart to match up with the trend. Now, some traders like this, some traders don't. It really, whatever catches your eye. If this is appealing to you, then use it. If it helps you to stay on the right side of the trend, then use it. If you see in the background red, you know, okay, I shouldn't be taking a long position. Right? Once things begin to shift, then it becomes okay for you to take a long position. Does it come with TradeStation? I have to find out, because I use eSignal. I will find out for you though, Ruby, and I will let you know. But for those of you on eSignal, I know for sure this is an option you have. And like I said, if it appeals to you, then by all means use it. And every time we came up to resistance, sellers drove prices lower. Right? Here was a deep move into resistance, but it was a move into major resistance and nothing more. Right? The trend was still down. We never broke above a major resistance area. We just simply came up into it, and then we rolled over from there. Right? Again, we can see that using this background, it stayed green the whole time. The trend remained higher. We did not break major support at any point on this chart. So again, this just helps to keep you on the right side. Will it be available for Realtick? At this point, I'm going to say no. Not because we don't want it to be, but because Realtick is just such a difficult platform to write the coding for. eSignal and TradeStation are much easier. So it's not because we don't want it done. It's just that we haven't found anyone willing to do it. Alright, so again, background color is red. We're thinking short. Well, not that the reversal is less reliable, but that's associated more with overlapping bars. It's a 13-period moving average, Emor. A simple 13-period moving average. Okay, so you see here we've got these level 2 and level 3 pivots down here. We've got some more overlapping bars going on. Same thing you can see happening here. So, but I mean at the same time, here's a level 3 pivot that followed through to the downside. Here's a level 3 pivot followed through. So it's not to say that it's going to be less reliable. It's just that more often than not, level 2 and level 3 pivots are going to be associated with some more overlapping bars. Level 4 pivots like this one up here, these are going to be the cleaner moves. So the trend is down, but when prices moved above the moving average, it told us that the beginning of a trend change may be starting. It may be starting, but it never materialized. And we came right into major resistance and came right back down with a deep move. This pattern could have set up a W bottom with a new low reversal, but it didn't. And so that's the pattern here. What pattern may have set up? A double bottom with a new low reversal, but it didn't happen. It was just too weak. The 13 EMOR is just, it just seemed to fit better. The futures can move quickly at times, so we went with the 13. The 10 was a little fast. The 20 was a little slow. The 13 just fit. You can use whatever you want. I mean, it really doesn't matter. But no, it has nothing to do with a fib number. But I mean, we just found that it does follow price better than the others. Now, what happened here to change this to green? We didn't break major resistance, but what we did have was a double bottom with a new low reversal, which tells us that we're no longer in a downtrend. And also, we had a higher high, higher low, and higher high. So this begins to establish an uptrend. Right? When you get a higher high, two higher highs and two higher lows within a downtrend, that begins to establish an uptrend. Right? And you had the void to move higher. So that's why this started to shift to green. Right. Zed, I think that you may be looking too deeply into this concept of pivots, to be 100% honest with you. I think that you have a very strong understanding of it based on what I've seen so far, and that you're looking for too much. You're trying to find something that's not there. Just accept it for the simple analysis tool that it is. Embrace it, and I think you'll be a lot more relaxed or relieved. All right, so again, trend is up. While there were deep retracements, never broke major support. And so while at times we may see the break below the moving average, and that does tell us that supply is beginning to increase, if it doesn't break major support, it really is meaningless. Right? It means nothing. We have to see the break of major support for it to then become meaningful. Right? Over here, on the right-hand side of this chart, here is where it's starting to become more meaningful, because it looks like now we're starting to really get an increase in supply here. Double top, failure to move higher, bearish bar closed on its low. This is becoming more bearish, but we still have to wait and see what would happen. All right. So here we have higher low, strong move up, turns into a double top with a new high reversal, short move lower. Once we broke this major support, there was nothing to stop this. Big unfilled gap. This accelerated move creates a void back up. We get a retracement here into the declining 13-period moving average, and a little area of resistance there. See that little overlap with a bearish little inside bar. Move back down. So you can see here how these pivot highs, this is nice fluid movement. It's over here that we're starting to deal with some more chop. So when I said earlier you want to look for the quality and avoid, the crap, excuse the French, you want to look for bars that are forming like this. You don't see many tails. It's very decisive bars. Even the bars retracing are decisive until we reach an area of resistance where we start to see an increase in supply. So you want to see these bars that have very little to no tails on either side. When you start to get into this, where you're getting these overlapping bars, this is the stuff to avoid. Don't bother trading in this. Wait for it to clean up. Let this breakout happen. Then wait for the pullback and buy it here above the bottoming tail. Right, that's the kind of quality you want to wait for. We don't have to sit here trying to make something happen when there's really nothing going on. Don't try and force things when they're not existing. All right. Now, this is another script that you guys have. Again, just if it appeals to you, then use it. Where would I have entered on this downtrend move? Well, here was one spot after the sharp retracement down, this topping tail bar and then inside bar, because notice that this bar took out the high of the prior bar and it came back down closing bearish, and then there was another little pause bar there before the breakdown. So this on a smaller time frame would have caught traders on the wrong side. So that would have been the signal that supply is increasing. The void that we have below, the short could have been there. This one would have been way more questionable. I would not have taken this. I would not have taken this because we're too close now to the support. But that PSS would have worked. This little breakout failure would have worked. You want it down here? The little green inside bar down here after the wide range bar? Yeah, this is where you would have been getting out. That wide range bar followed by an inside bar is your warning sign. Absolutely. Then you wait, then this move up took out major resistance. So after this consolidation happened, I don't know, I probably would not have bought this breakout, but on the pullback, then I would have been looking to buy. That probably would have been, I would have had to see how things were trading at that point. And going back to this slide though, this again, this is an E signal. I don't believe, and this isn't even, I believe this is just a script that's in E signal. Yeah, it's the trend script with MA price bars. This isn't even a custom script. This is just an E signal. If it appeals to you, if it appeals to the eye, then use it. Basically, as long as we're below the moving average, it colors the bars red, regardless of the open and close. And then if it's above the moving average, it colors it green. The purpose or the use for this is just visually, the color of the bar is not important. It's the direction of the trend that's important. And by using this particular script, maybe it could help you to stay more objective, more on the right side of the trend. Again, it's just visually, if it works for you, great. If you don't like it, don't look at it. Plain and simple. But you can still see the same concepts. Here's a move lower into the gap fill. Buyers step up, stabilization. Here we get a move higher. Here's a potent reversal up, leading to another strong move. Consolidation, breakout, topping tail, inside bar starts to break lower. Here's your shakeout. Tries to move up after testing support, fails to do so. Bearish bar down. This is the signal to short. Right? Same way to analyze the chart, just a different way of seeing it. Here we are again. Trend script with the MA price bars. Here we have a bear flag. Right? The trend here, the retracement here is not at all bullish. This is a bearish retracement. So while there was an attempt here to break lower and failure, it never took out major resistance, which was all the way up here. Right? So this was the bear flag. We'd be looking to short it under this inside bar's low. Right? Because look at this here. Basically what we're looking at in essence is a little breakout failure. Right? Tries to break out, followed by an inside bar. Shorting it under that low, and then riding it down. So once this lower low was made, this now becomes major resistance, where we have the star. Little consolidation here. This is minor resistance, because then we broke lower. So retracement back up into minor resistance. Lower low is established. This now becomes major resistance. This little pause here, there's our minor resistance. And we just continue to do the same thing. Here we're looking at different trends. Sideways trend here on the 5-minute becomes a strong downtrend. We could see that supply was increasing. So in this overlap, we just want to sit it out, avoid getting chopped up here. Once this strong downtrend is established, though, there were opportunities right here, right? Opportunity right here on the PSS, another opportunity on the failure to move higher here, and another opportunity right here on the continuation lower. You know, you could even make an argument for here. So there were several opportunities. You know, the point here, avoid this sideways chop. Wait for sideways price action to become a strong uptrend or a strong downtrend. Sideways trends are difficult to trade and best to avoid. Right? Wait for a trend to develop. Period. Okay, review of concepts. I'm going to take a break here. That was, we spent a good amount of time on that section.